Hey guys, welcome back to another video with the pod seat.
Hello guys, welcome back. And we have something new today we're gonna share. And well, as
New
always, we
as
hope you
in
guys like it.
new as in we have a new bank that's failing. That's what it is.
Well, I didn't want to say that, but it this video is not gonna be much of a good news, is it? Just because a lot of, well, not a lot of banks, but some banks are not doing too well. Uh and it's not a good thing. So we did a video last time and we were talking about the banks that are not doing well. They are located in a single state. And the new banks that are not looking too good, they're also from the same state, right?
Well, basically
At
what's
least,
happening is that we've been talking about how these bank stocks are still not healthy, especially the regional ones. Now, what's happening is that they're basically falling like a domino effect. So in 2008, we had three to like four big banks fail, which caused a big panic and big financial crisis, right? So in 2023 right now, we have a lot of these smaller banks, these regional banks, these crypto banks that are, they have heavy assets and they're falling right now because of fears of what these investments these banks have put themselves in, and are they ready for the spike in interest rates. So basically, if I was to tell you that, uh if I put $1 billion with 1% interest rate that I was getting in 2021, that was one of the top, interest rates given at that time, because, the Fed really, like, the Fed canceled all interest rates and everything. They basically made it to zero, which made housing very affordable, cars very affordable in the beginning of the pandemic, because, interest rates were like to nothing. And now all of a sudden, there's in within 1 year, the interest rates have spiked 5%. So if I was to invest $1 billion on a 1%, uh, you know, interest rate, right now, my money isn't really making money, because right now you're getting 5% interest rates on like savings accounts, CDs, other bond rates, and treasury yields, right? So that causes your money to actually lose value. So you're actually, going towards a negative, because a lot of people that have money in their savings account and want to invest it in something, they want to put their money in there, but the bank isn't making the same investments. So they're not really making the same amount of money that people are actually investing in right now, which is causing losses. And that's why these banks are selling their assets, like SBB did. FRC put themselves in a same position. And now these other banks, basically this new bank called PAC Western, and another one that is called Western Alliance Bank Corporation. And there's like a couple other ones that are following the footsteps, which is Zion Bank Corp. And most of these banks, this actually, there's a lot of banks that are basically in California that are going in their same route. PacWest is the newest member of the Californian bank crisis in the regional banks that are falling, is falling. And another one, which is Western Alliance, is actually located in not too far from California, which is Arizona. So we were talking about that in the last video. Do we see the spread going further than California? And now we might see these banks come, and it might be a domino effect where it's spreading. So and a lot of these banks are considering options to, be bought out, and it's becoming just like the 2008 financial crisis. But in 2008, there's a lot of banks, like 110, 120 banks that were sold. So right now is just like the beginning. we're at the tip of the iceberg. We haven't seen how much damage it is actually that's happening, and that is causing fear within the market. So that's why the markets were down today.
Yeah, and it's funny to me when you said that the banks are their investment is not making the same return as their customer investment in terms of interest rate. I think a bank should know better that you don't put all your eggs in one basket. They should have some liquid, some money that they can get to it quick, knowing that we came from 2020 and we had a pandemic. Something like when something like that happens, that major event that we never seen it before, they should have known to be a little bit more careful because even I mean the interest rate was the lowest ever, and you know interest rate will always go up. It will never be at 1%, 0% for too long. And I think it was a big mistake, and I just feel that banks should know better. But we will see if another bank or more banks, which it looks like they will, get in trouble. And you're right. This is just the beginning. This is, I hope it won't, but it looks like it will get worse for banks. And I think the government is not going to stop increasing the interest rate either.
Yeah.
What do you think about the interest rate? Do you think it's going to go up again?
Right now it has no we have no actual evidence that it will stop. It's all up to the Fed. If they see inflation keep rising, so the next inflation keep rising, they're gonna keep raising the interest rates because their number one goal, and they repeatedly said it, is to fight inflation. Now, inflation, there's other ways to fight it, but I think the Fed wants to crash the economy. And that's how supposedly once they crash the economy, once they see that things slow down, actually, that's I think when they'll do a pivot, which is going to cause a U-turn in the interest rates. Maybe they'll keep it at the same level. They might not, increase it for a while, which is going to be healthy because if they keep it at the same interest rates, you'll still start seeing layoffs. You'll start seeing people companies try to spend less. Hopefully it doesn't slow down innovation because innovation is what makes this country great. Now, going back to the banks are supposedly saying this lingo called exploring strategic options. Basically, that's basically a cry for help. There's there's a bank that failed literally Monday, the beginning of this week, and we already have two banks that are like falling, and shareholders are pulling out their money. So a lot of these banks have not experienced any ordinary deposit flows that are like related to like First Republic Bank or SVB, but they are fears, and a lot of people are gonna take their money out, from these regional banks and go to bigger banks. Why would you want to risk your money at a place where uh you know and these assets are very dry, and ready to catch on fire? So right
Yeah,
now imagine yourself in like how a California wildfire is. That's basically what's going on with these banks, and they're catching on fire one by one by one. Now, to basically stop this flow is basically that people are gonna have to like not expect, like when you buy a house, you expect the property to rise, the value of your property to rise 5 years from now, or 2 years from now, or 3 years from now, right? That's how these people keep making money. Now, when you know and then there's a lot of money that's already been printed, so it basically raises a lot of values really quickly. So you would see a house that, like in Texas, house that was 250,000 right now is going for like 550,000. That's more than 100%, you know increase. So a lot of people are selling their houses for profits, and making money off of that and trying to look for the next investment. Or some people are selling their house in California, which are even higher, and coming down to like places like Arizona, Texas, uh, Denver, and buying houses that are even cheaper and keeping profit. So people like have money, and that's what the economy is thinking, that people have money. That's why people are keep spending and spending and spending. And then you see these prices increases, and the interest rates aren't really affecting them right away. You gotta understand that for interest rates to actually take effect, it takes a little while. So right now, we're not feeling the full effects of this 5.25 point basis increase that's happened within the year and 2 months. So with that being said, right now we're just seeing sort of the effects, and we're seeing the effects of what's breaking, and it's these regional banks, these smaller banks. So I don't know how many banks can be left to be taken over, because right now they everyone wants a bigger bank wants a smaller bank to fail, because hey, the FDIC is going to be protecting them with $50 billion, and giving them assurance, basically, if the deposits can't be met, then they'll be helping them out. So these big banks definitely want these smaller banks to fail. So I mean, who wouldn't?
So basically, big banks are just getting ready with their wallet, their
There's shopping season for them.
checkbook, and just waiting to see who's
Pennies
going to
for
be the
dollars.
next one to get.
Pennies for dollars.
Yeah. Well, if they do take small banks, man, hopefully they're going to do it for the best, meaning that
I honestly think that there should be other investors out there besides these big banks, but the regulators aren't letting that happen. Like, I think these banks should be bought out by like investors that are independently run. So it gives a better chance for the regional banks to stay alive. There's a reason why we have regional banks, because if something happens, and God forbid, you can't go to a big bank. You go to these little banks that maybe you might have to pay a little bit of more interest, or but to get a loan or anything like that. To start a business and to keep capitalism alive, you need these smaller banks that will actually bet money on you, instead of these big banks, which are more like secure. Like, okay, why do you need this? Why do you need this? Da, 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 da. And uh so as like an entrepreneur type of thinking, you would want these banks to survive. But right now,
yeah.
it's not happening. It's not the case. So
Well, good
see
luck if
this
you go
as a
to a
pattern.
big bank, try to get a good luck if you go to a big bank, try to get a loan, a business loan. That will never happen
Mm.
unless you already have a history and you have some liquid.
Yeah. So if we're looking at these banks right now, PACW is already down 70% from its initial, and this is within 5 days. It's already down 70%. You see Western Alliance following the trend. That's already down 51% from the past 5 days. And I think this trend is going to be continuing going downwards. It's the same trend that we've been speaking of with First Republic. First Republic was down 44% these last 5 days, but if you look at it in the past month, it's down 78%. And people would basically ask, hey, should we invest here? Should we invest here? No, no, you shouldn't invest anywhere here. Like the amount of people that were saying that, maybe it'll come back because, First Republic isn't really like SVB, but it got bought out. And guess how much it was at that moment. This is actually not this is not actually the let me First Republic price right now. It's in some other currency. Let me stop sharing this and share the actual chart of FRC. So that chart's actually making it FRC actually look good. Let me show you what it actually looks like. So this is what it actually was at before, Chase bought it. 30 cents is what is at, So basically
That's
it was at its peak, it was at I think 220, yeah, 220. And basically pennies for dollars, Lex.
Yeah.
pennies.
Not good, man, but it's good news that somebody came in and bought him out.
Yeah, the
And
people that were shorting this, man, they made a lot of money, and people probably knew about it at this stage. A lot of people. So, and the graph was like the perfect bear graph you could ever ask for. This
yeah,
is what a perfect bear graph would look like, if anything. It does,
well,
yeah. So within from November 2021 to within 2 years, this has not even didn't even get a chance to basically get up from this. So with that being said, I mean, these banks, and if you're trying to invest in them, uh be very, very careful, because right now, interest rates are still spiking. So more of these banks are going to be falling. Especially with what's going on with their investments. So basically look out for their earnings, because a lot of investors are going to go deep inside and try to research and dissect every possible aspect in that bank to, but I mean, before they make any investments, they'll be straight to the point and be like, hey, we're pulling money out. And you'll find out like a week later. And that's when the crash actually happens.
well, yeah. Let's just go ahead and hope that's gonna get better. Um, I think I think I have that hope that the banks are gonna other banks are gonna learn what's going on right now, and by that they're gonna take new ways to do things better before it's too late for them. Like you were saying, some of these banks are from California, and you and I have been talking about that. And hopefully other banks in different states, because every state the economy is different. Uh, hopefully they're gonna learn and take actions quick and try to save their bank and their customers money. But I think that's what we have for today, don't we? On this
Yeah.
video.
Well, guys, like, share, subscribe, and leave us a comment and let us know what you guys think. Thank you.
Yes. Thank you for your time, and come back and see us again. Take care.
Bye.